not quite 9 years now. Generally spent most of that time on our phone bank. So if you had a question, you called our 800 number, there were good odds you would reach me. I know we had a couple of questions that were put in with your registration. Most of them are going over excise tax things, and so I'm just going to kind of knock those out real quick, and then we'll get into the main prepared presentation as it is. So our first question was a list of sales taxable items and services that prime contractors are subject to, and things that they're exempt from. Contractors with excise tax licenses cannot buy any products or services exempt from sales tax. Architecture, engineering, materials, all of the things subject to sales tax, they just pay sales tax on it. So there are no sales tax exemptions. We have examples of sales use excise tax filing for qualified utility projects that complete a job and need to pay the sales and use tax on the excise tax return. There's a line for use tax, and the sales tax return has it as well. And we'll go through an example of that later in the PowerPoint. So if this is your question and you recognize it, you want some more details, we can go over that when we're doing the return. We also have a presentation on the contractor's excise tax. I think that's on Thursday. Is that right, Lori?
Thursday, yes.
Thursday. And so they'll go into a lot more detail on the qualified utilities and the contractors and things like that. Another question going over calculating taxes on money in tips and partial proceeds that will be donated. South Dakota does not have an income tax for individuals, so tips are not subject to sales tax. Donations that are free will offering are not subject to sales tax, and so we don't have anything as far as the tips or the donations other than that they must be entirely voluntary. You cannot put suggested price $10, but it's a donation, it's okay. No, if you're telling us it's $10, then you're going to have to charge $10, charge the sales tax on the $10. If it's a free will offering with no suggested prices, they can give you whatever they feel like. That's a free donation. There's no sales tax on it. It does not get reported as part of gross receipts. It doesn't go anywhere on the sales tax license. I'm sure your accountant would appreciate if you did good bookwork to separate that from your regular receipts. The IRS certainly might want to know about tips and things like that, but the state of South Dakota does not. Am I still on, or did I get lost here?
I can hear you.
You can hear me. Okay, I had somebody ring in with a phone call.
Oh, nope.
Okay. The next one is how to know what tax rates to apply to orders mailed in state and mailed out of state. We'll go over that in the presentation here in a little bit, but sales tax applies where the customer receives it. We do have a function on our website where you can type that address in and it will tell you what that sales tax rate is at that particular address. Anything sent out of South Dakota is not subject to our sales tax. You may need to find out about the sales tax in the state you're selling it in to. Let's see. We have another question about owner furnished material, which is again going to fit into our Thursday contractor's excise tax seminar. Someone's asked about paperwork for items sold in South Dakota and then shipped out of the country. It sounds like it's probably a resale transaction, and so we'll go through those here again later in the seminar where the buyer is going to buy it exempt from sales tax and ship it to their customer. They'll just provide an exemption certificate. If you're buying it, having it delivered to you, and then you're going to drag it out of South Dakota, you owe the sales tax based on where you received that item. Let's see what's going, pull up the chat.
I see that you see it, but I'll watch for you too, Alex.
Okay. We have a machine and bill it out to a job. Is that subject to sales tax or excise tax? So if you're purchasing a machine because you need it to do your contractor excise tax job, the purchase of the machine, the equipment, the material, all of the things that you buy, subject to sales tax. Um, if you're hiring somebody who has the machine to come in and do a part of the job, they might qualify as a subcontractor, but that's totally different. If you're just looking to rent a machine, buy a machine to do your job, you just pay sales tax, or um, potentially you could run into use tax. Generally, the seller's just going to charge you the sales tax. Let's see. And taxes for small businesses that make their own products and sell them, baked goods, skincare, handmade decor. Um, we'll be going through this, but the items that you incorporate into your final product, you can purchase exempt from sales tax for resale. You do need to have a sales tax license. You do need to fill out an exemption certificate and give that to the vendor that you're purchasing from so they can document why they did not charge you the sales tax. And then when you sell that product to the end user, you'll calculate the full amount of sales tax on the selling price based on where they receive that product, whether it's your home, their home, your store address, however that may work out. And then, okay, follow up on the question about the machine. Okay, if you're billing time on a machine that you own, however the job is subject to tax, it doesn't matter that you're breaking out labor, material, overhead, hourly machine, whatever. The job is subject to either sales tax or it's subject to excise tax, and you'll charge that tax on the full amount that you're billing the customer, depending on what you're doing. So does that answer the full question there? Okay, so sales tax and excise tax. The contractor's excise tax applies to real property improvements in the state of South Dakota. So if you are building a building, modifying a building, if it requires you to pull a building permit, it's going to be the excise tax. If it is something that is not a real prop,
Some instigator.
did we have some? Okay, thank you. If you're doing something that is not a real property improvement, now we're into the sales tax. The sale of items, the sale of services, things like snow removal is subject to sales tax because we're not modifying the real property. So if you've got a skid steer and you're charging an hourly rate for the use of your skid steer on a snow removal job, that 1 hour worth of time, you're going to charge sales tax on. If you are excavating to put up a retaining wall, the retaining wall would be subject to the excise tax, and so you would charge excise tax on that hour worth of the skid steer time, along with all of your other um, hourly time, wages, overhead, whatever you want to bill the customer. We don't worry too much about breaking out the labor versus the overhead versus the machine hours. Those might be very important things to track for your federal income taxes with your tax accountant. It does not change the sales tax or the excise tax. We're going to look at what it was the job for and where was the job done. And then the sales tax and excise tax apply based on basically those two pieces of information. Okay, if we got all of that out, let's go into the prepared presentation, and we'll probably go over a lot of these things again. Couple of the housekeeping things. This and the materials that accompany the presentation are not specific written advice to you. If you would like specific written advice for a circumstance that you have, and you want to just put that in your records to say that the Department of Revenue told me on such and such date, please email us, um, give us a call. We can set you up with either an individual email address. We have a generic business tax email that you can send it to, but please send it to us in writing. We will have someone answer it and send it back to you in writing. That way it is specific. And Lori just dropped that email address in the chat for everyone.
All of our contact info will come up at the end of this presentation as well.
Okay, yep, thank you. Okay, so getting into the licensing. So who needs a license? Anyone who sells, rents, or leases any kind of tangible personal property or transfers products electronically, sells any kind of service, engages in realty improvement contracts, purchases products or services that may be subject to use tax. So yes, you as a household could certainly need to have a use tax license if you do a lot of out-of-state purchases and use these items in your day-to-day life, or if you have a business that has a physical presence in the state of South Dakota, even if all of your work is going out of state or is sold to a government and is exempt from sales tax, you still have to have a license. The South Dakota sales tax licenses are done on a location by location basis. And so if you have, say you own gas stations and you have 10 gas stations throughout South Dakota, you will have 10 separate sales tax licenses. There are circumstances where we can consolidate the filing requirement for you so that you only fill out one sales tax return for all of those licenses. It streamlines the accounting part of that. There are some requirements. You have to apply for that status with us once you have the licenses, and we can go through that process with you. It is an option, so don't let the fact that you need a lot of licenses if you have a lot of storefronts dissuade you from opening the storefronts. But each location will have its own individual license. Okay, one of the things that we said in the last one was Nexus. Nexus is the connection that you have to the state of South Dakota. For the vast majority, we're going to be talking about physical nexus, where you are physically located in the state of South Dakota, whether your business is based here or you're in another state, but you come into the state to do some work, make some sales, meet with clients, deliver the product yourself. If you have leased property, so you have someone who has leased equipment from you on a 5-year basis and they're in South Dakota, your property, you still own that equipment. And so you would have to have a sales tax license to charge sales tax on the value of that lease. If you have, again, the salesmen, representatives, truckers, peddlers, or canvassers, people who enter the state on your behalf, enter into a contract with a South Dakota business to provide your services to their customers. If there's some overlap, that can create that physical nexus. The construction services, if you're part of a contract to provide real property improvements, you're going to have a license. It might be sales tax. It's probably going to be the excise tax license, depending on your particular service that you're providing. But if you're part of a real property contract, you're going to need to have an A license, depending on your use. Or if you have a carrier who provides additional services beyond the delivery, so installation. So if you sell furniture and you've hired a local delivery company to set up the bed or the couch or whatever it might be, and they put it together, that is going to create a physical presence for you in the state because they're working here on your behalf. For any of these businesses that have the physical nexus, there is no minimum threshold before you need a license. Day one, $1, if you're physically located in the state, you must get that sales tax, excise tax, license, whatever is appropriate, again, based on your business. As opposed to our remote seller economic nexus. This is for companies that have no storefront. They don't have any of those things on the previous page that create physical nexus, but they do have $100,000 in South Dakota sales during the course of a year. For the remote sellers, this economic nexus, once you hit $100,000, from that point forward, you must be licensed with the South Dakota Department of Revenue for a sales tax license. Any questions about the who needs a license, nexus, when it kicks in, anything like that? Okay, not hearing anything, we'll move on. You've heard me talk about some of these already, the different types of licenses that we have, the sales tax, the excise tax, the use tax. There's also a manufacturer's and a wholesale license. So in general, we have the sales tax. These are for the businesses who they sell, rent, or lease any kind of tangible personal property, products transferred electronically. They provide some service. Sales tax is for someone who has a sale subject to the sales tax, and you're selling it to the end user. The customer comes to you, they're going to buy it, they're the one who's going to use it. As opposed to the wholesale license, which is for a middle business that sells to other businesses who buy exempt from sales tax for resale. And so you can be that middle person between, say, the manufacturer, the business that makes the item, they sell it to you, you sell it to a business, and then they sell it to their customers. We don't use the manufacturers and the wholesale designation very often. It's more often we see the sales tax licenses, but those licenses do exist. You can apply for them on our website. They're just subsets of a sales tax license. The reporting is generally going to be the same. The return is the same. It just tells us a little bit more about things to look for on those returns, or if we do a review or an audit. And then the other type of license is a use tax license. So this is for the consumer, the end user of the product. If you have not paid the sales tax to the retailer for whatever reason, they're outside of South Dakota and they are below that $100,000 economic nexus threshold, and they do not have and are not required to get a sales tax license, they can still do business with you. They can sell their product or their service to you, but you as the South Dakota person, business, whatever you may be there, you still owe the tax that would have been due. It's just now use tax instead of sales tax. The what is taxable, the tax rates are all the same between the sales tax and the use tax. The only difference is sales tax, the retailer collects the tax from the customer and sends it to the Department of Revenue. For use tax, for whatever reason, the retailer did not collect the tax, and so the customer sends the tax that's due directly to the Department of Revenue. Okay. Any questions about those various types of licenses? When you might need one, when you might need multiple types, anything like that? Okay, we'll keep trucking along. The South Dakota sales tax rate. It consists of a couple of pieces. The first piece is the state sales tax. The state sales tax rate is 4.2%. This applies to anything sold within the boundaries of the state. So the 4.2% is going to be on any retail, sale, lease, or rental, tangible personal property, products transferred electronically, the services, anything subject to sales tax, you're going to have the 4.2% state sales tax. The contractor's excise tax, those real property improvements, they are totally separate. They are not subject to the sales tax. They're subject to that excise tax. It's a 2% contractor's excise tax. Um, there are no circumstances where the same product or service will be subject to both the state sales tax and the excise tax from the contractor who's doing the work. Um, I want to clarify that when a contractor purchases material, they go to the hardware store, they buy the lumber, they do pay the sales tax on their materials. They can include the cost of the material, the cost of the tax in what they bill to the customer, but they are not billing the customer sales tax. They're going to bill the customer the excise tax, and they're going to include any of their expenses. They do not have to itemize, break it out for the customer, but they are responsible for paying that. But you won't have a job. I'm going to install a irrigation system for somebody at their house to put in a sprinkler system. Contractor's going to charge the contractor's excise tax 2%. They are not going to charge the customer the 4.2% state, potentially city tax on top of that contractor's excise tax. They're going to be separate. Okay, hopefully I haven't muddied the waters too much there. The Thursday contractor's excise tax will go into a lot more detail on that one. So for the sales tax, the gross receipts is the total amount of money or other consideration that the customer pays to you for those things, subject, whether they're subject to tax or not, the full amount that they give you. So it includes both the taxable and the non-taxable sales. It includes things that are delivered out of state. It includes, kind of as we have on that arrow there, special jurisdiction sales, so sales onto tribal ground, barters. If you decide to trade your neighbor, I'll trade you 5 chickens, you'll trade me 1 goat. Those are both sales taxable sales, even though they're being made in chickens and goats. Sales tax still applies. You just figure out the dollar value of your 5 chickens to the dollar value of their 1 goat. And then you put that amount in your gross receipts. Even though you never received the cash, you got a goat, you still got however many dollars worth of goat that happens to be. There are anything like reimbursable expenses. There are accountants and attorneys who have some special rules. Outside of them, just because you had an expense for a customer, you don't get to deduct those expenses. There are very specific rules for the accountants and attorneys. If somebody wants to go into those, we have a document on our website that I can link to for you. If we don't have anybody who wants to go through those, we'll just kind of leave it there at they exist and we'll carry on. Okay. And then the gross receipts, you have your lottery receipts as well. So all of these things get included on the sales tax return as part of line 1. It's the total amount of business that you did during your return period. Okay. does not include trade-ins. So if you trade in your old item and you get a credit value from that, you don't include the credit of the trade. Fees or interest for late charges, overdue accounts, return checks, things like that, those are not included as part of your gross receipts. And then if you have a refund during basically the same period, you don't need to report the refund. If you did report the refund because it's from reported the sale on a prior period, you can net it out on your non-taxable sales the following period when the return happens. And then if you give a customer a discount, say senior citizens and military get 10% off, you do not include the 10% you did not charge to the customer. Nobody's paying you for that. You're not getting the money, so you have no gross receipts to report. It's just that you're collecting a little less. We'll go through a few things on coupons later in here, but reimbursed discounts, you do still charge the tax on. Okay, and then there's a few other things that are not included if they're separately itemized and have the document to the purchaser. Any taxes imposed directly on the consumer, sales tax is not included if it's itemized or documentation shows the tax is included in the price. Interest, financing, and carrying charges, fees, interest imposed for late charges. So if the one that I think of is there's a federal tax on tires. As long as the seller itemizes that tax, they don't charge you the sales tax on it. If they do not itemize that tax, they charge you sales tax on the full thing. They might be handling it in the background. Yep. And then, Lori, do you want to drop the accountants and the attorneys tax fact links into the chat?
Yes, I surely will.
That'd be great. That'll go through those rules for the reimbursable expenses. Accountants and attorneys have a few differences that are specific to them. Okay. Are there any questions about any of those gross receipts things? We're not going to be deducting your cost for the product. So when you go to your wholesaler, you buy the item for $10, you sell it for $20. Your gross receipts is $20. There's no deduction on the sales tax return for your cost of that material. Again, important to track for your federal income taxes. It goes towards your taxable income for the federal income tax. Your accountant will appreciate knowing what those numbers are, but it doesn't apply to the sales tax. And so all of the things that you're going to encounter as your expenses, your accountant's going to ask you for them, doesn't play with the sales tax. These are all going to be important things for federal income taxes. Your cost of materials, labor, losses, your transportation, the shipping and handling fees, all of those things, they're expenses for your business, but the customer is being charged the sales tax on the full price that they paid with no subtractions for your costs for the sales tax. Okay, the delivery charges. So transportation, shipping, postage, handling, packing, all of those things are subject to the same tax that the rest of the product is subject to. So it's based on the customer's delivery address, the 4.2% state and then most cities have a 2% city sales tax. Customers who live outside of city limits are not subject to that city tax. And there's a few cities, municipalities that do not have a city sales tax. But all of those delivery charges are just included in the taxable price charged to the customer. If you're selling something that is exempt from sales tax, if a customer has given you a resale exemption, whatever the case may be, if you are not charging sales tax on the item, you do not need to charge sales tax on the delivery fees. The delivery fees simply go along with the item. If we have a mix, some is taxable, some is non-taxable, the taxes due on the portion of the delivery charge that is for those taxable products might be determined by weight, the taxable property compared to the total weight of the non-taxable property. Depending on how it's shipped, you might have multiple boxes and you just charge individually. Important to be consistent and have good documentation in your records showing how you reached the taxable versus non-taxable split if you're splitting out the shipping as partly taxable and partly non-taxable. It's important to be consistent and have good documentation there. If you're ever selected for an audit or a review, we would want you to explain to us how you reached whatever conclusion taxable amount you got to. Okay, barters, kind of went over this earlier. Barters an exchange of a product or a service for another product or service. I use chickens and goats. Can also be haircuts for vegetables or whatever the case may be. The value of the product is subject to sales tax, city tax, assuming you're inside city limits. You just figure out your dollar value of this is what I sell it for. You write it all down in dollars. We don't want to measure, $500 in sales and 2 chickens in trade. Just tell us the dollars the chickens were worth. However that works. With these, it's important to do documentation that says Bob paid me in 2 chickens for services worth $100. Here's the tax on the $100, even though you never collected cash. If you have good notes, again, when you're selected for an audit or a review, it makes it real easy to agree with you that, yep, you charged the sales tax and everything there is correct. Okay. Returns when we are not.
Can I interrupt you for a second? We
Absolutely.
have a question on trades and barters here.
Yeah.
Is use tax applicable on trades and barters?
So use tax on trades and barters can be. If you are a business, generally we're dealing with the sales tax. You're selling your service to a customer and they're paying you for that service. So that's going to be sales tax, even though they're going to pay you in chickens. For the use tax, that would happen. Trying to think if there's an example of a
I know I'm trying to think of an example too. I'm going to go with use tax on a barter is going to be less common for sure.
It's going to be very rare because we're probably talking about 2 individuals who do not have a business. They're not generally selling chickens. They're not generally selling their goats. But, I've got a buddy, he's got something, I'm going to trade him a couple of things where neither of us are in business. We're not going to have a sales tax or a use tax requirement because we're not in the business of that. It's the same for if you have a garage sale. You're not in the business of having a garage sale. You don't need to worry about the sales tax on your garage sale items, even though you're selling things. there's an exemption for these occasional sales. And then for trades and barters, if you're exempt from sales tax, would the exemption be here too? Okay, so if you are a doctor providing an exempt health care service, the doctor visit is exempt from sales tax. If you're providing your service, it's exempt from sales tax, whether you're paid in dollars or you're paid in chickens or veggies or whatever the case may be. So again, we would be looking at the product or the service that you sold as being subject to sales tax. The barter is just how you're being compensated for the sale of that service. So if it's exempt, the fact that they paid you in chickens does not make it suddenly taxable. And yes, if anybody can provide you an exemption certificate for resale or anything else, the barters are
Yeah, your exemption is still going to apply.
It's still valid. The barter is just, again, instead of giving dollars, they're giving chickens. That does not change the transaction for the seller to the customer. You're selling them your product or your service for $100 worth of chickens, $100 worth of vegetables, $100 worth of whatever it might be. Okay, back to the returned merchandise. When you previously reported the sale, you've collected the sales tax from the customer, you've paid the sales tax to the Department of Revenue. Now the customer has come back and said, you know what, I'm turning this in, it didn't work, it doesn't do what I needed it to do. They're going to get both the price they paid returned to them and the sales tax returned to them. And then when you go to fill out your next sales tax return, you just add the returned items into line 3, the non-taxable sales portion of your return. It's how we subtract out items, whether they're non-taxable, they're sent out of state, they're being returned. All of those things go into line 3. And if you're filing an EPATH, the system does all of the math for you. It will take line 1, your gross sales. It will add line 2, anything use taxable that you purchased and owe on, and it will subtract non-taxable sales, and it'll calculate you owe tax on X dollars. And then, assuming you're in city limits, you simply subtract out the return from your city taxable sales. We just want the net amount subject to sales tax. And then you get your full 6.2% sales tax as a credit on this return. In the event that you have one large return and very few other sales, you can have a return that does result in a credit back to you. You have a negative $300 return. It happens. We can deal with it, but you're probably going to get a call from an agent going, what were the circumstances that made this return negative? And then you just send us a copy of, yep, here's my sales and the return credit memo, whatever it is, and we carry on with that. Then you just use that credit on your next return until you've incurred enough sales tax to offset the credit that you have on the account. If it is the same period, so somebody buys it March 3rd, they return it March 10th, you basically just, it nets out. It doesn't need to go into the gross sales because you didn't have the sale. Oh, yep. And then Lori popped up with EPATH. I mentioned that it's our electronic filing system. Works really well. We would like everybody to file electronically through EPATH. I know there are a few people who prefer to do it on paper. If you do it on paper, you have to do all the math yourself. Okay, discounts and coupons. So store coupons where the retailer is not being reimbursed, the discount is not subject to tax. So these are for whether you put a coupon in the newspaper and say, 50 cents off of paper towels, or 10% off for veterans and 10% off for first responders and 10% off for senior citizens. Whatever you want to do, you'll have your amount of the item, you'll have the coupon or the discount, and you'll take your subtotal. So paper towels, $3.50 minus the 50-cent coupon is $3. Then we're going to charge the tax only on the $3. So in this case, it works out to 13 cents of the state 4.2 sales tax and 6 cents of city municipal sales tax. The total charged to the customer is $3.19 in this example. And then what would be included on your sales tax return is the $3. That's what gets reported as part of line 1, your gross sales. So you don't worry about the $3.50 minus the coupon. We don't put those into non-taxable sales. The gross sales was $3 after those discounts, so long as nobody else is paying you that 50 cents. Okay, and then is the next one? Nope, next one is city tax. Okay.
Sorry, what were you going to say?
Well, I was going to see if it is the reimbursed coupons. I was expecting that as the next page.
Nope.
But
sorry.
Nope. So that's fine. If it comes up, we'll go over it. If it doesn't, we'll just kind of leave it there. Okay, so city tax. Cities may impose municipal sales tax up to 2%. It applies to all products and services subject to state sales or use tax. And then it applies when that product is used, stored, consumed within city limits. The city sales tax only applies within the boundary of the city. So if you are outside of city limits, if you go into the city and you buy your item, you're going to pay the city sales tax. So you live 4 miles outside of town, you go to the grocery store in town, they charge you the city sales tax. That is correct. You don't get out of the city sales tax just because you live out of the city. You received the product or service in city limits. That's where sales tax applies. If you have it delivered to you outside of city limits, now the city sales tax does not apply because you received the product at your outside of city limits location. If you go the other way around and you go to a store that is outside of city limits, so they do not charge you the city sales tax, but then you bring that item into city limits where your business or your home are, you would owe use tax on that 2% city tax that was not charged to you. So it's something to watch out for if you make a lot of purchases and you have a vendor who's outside of city limits, but you're inside city limits. You do want to watch and make sure that either you're addressing the use tax, the customer has you marked as 6.2% for the sales tax on there.
Do you have a couple of questions?
Real estate.
Yeah. Go ahead.
Okay, so real estate sales outside of city limits, but the closing is held inside the city. We have a real estate agents, real estate tax fact. Let me pull that up real quick. I'm going to drop the link right in the chat there. So this is our tax fact that goes over the specific issues for real estate agents. Let's pull that up real quick. So the sales tax is based on where the property is located. So where the title company is, where the closing is held, you might have a closing where the property is, a farm north of Sioux Falls. One seller is in Sioux Falls and the buyer is in Arizona. And so they all go to their individual title companies and they do all the paperwork. The sales tax for the commission for the real estate agent and all of those things are based on the property location as opposed to the individual title companies locations. The title company, if they're charging you a service fee to do all their paperwork, the rental of the room and things like that, their sales tax on their fee would be their address is going to be the location there. But the real estate agent's commission is based on the property address. Okay, and then we have one asking, say that again, but I'm not sure which part you wanted me to say again. Is there something? Okay. So if a product is sold in Rapid City where the 2% tax applies delivered to a customer, say they have a 1%, if the seller of the property is delivering it to the customer's address is what determines the sales tax. So customer has a 2% city sales tax, but in your example, if we sold it to a customer in a city with a 1% city sales tax, and you're delivering it there, you would wind up charging 5.2% because the delivery address is subject to that 5.2% total sales tax. It's entirely where the customer receives the product or the service. The real estate sales, the real estate agent service is assumed to be the property location. There are a couple of other examples for like attorneys where it's always the attorney's office, but products delivered are going to be based on delivery address. Okay, into some of the exceptions from the city tax. So passenger transportation, tour buses, taxi cabs, limos, party buses, whatever you have. City tax applies if the transportation starts and ends in the same city. They didn't leave. They're just touring around Rapid City. You're going to have the Rapid City tax. If the bus goes up to Deadwood, once you leave city limits, the city tax falls off and it doesn't get back on. So for transportation companies, taxis, cabs, buses, all those things, it's important to have notes about each of those transactions, start and where you went, so that you can determine city sales tax. Okay, another question. Online purchases receive it out of city limits, but the merchant charged the city tax. So you would have to go back to the online merchant. Again, our website, we have our tax match program. You can take the address, drop it in there, and it will show you the correct 4.2% rate for the out-of-city location. The merchant then has to refund it to you. You can't bring a receipt that says, hey, I was charged city tax and I shouldn't have been. You can't bring that to the Department of Revenue. We can't credit you back. We don't have your record of that transaction. So the merchant would refund you the 2%. They would either take the credit on that return, essentially as a return, reduce their city reporting on their next return. Depending on the size, they might go back and amend a return. That would be their responsibility to do, to credit back those dollars that were over collected. But we do not have a way to refund to the customer something that was over collected directly like that. And on your sales tax return, there's no way for you to get credit directly from us. You have to go back to the merchant. Okay. Um, Back to some city tax. Farm machinery, irrigation equipment, exclusively used for agricultural use, is subject to the state tax only, not the municipal tax. And then receipts from amusement devices, pinball machines, coin operated pool tables, those things are only subject to the 4.2% state tax. There's no city tax on those receipts.
Alex, a
Okay.
quick question
Yeah.
about
Yeah.
those amusement devices. What
Sure.
about those? Those are all pay to play type examples. What if it was an
Okay.
open space, like you paid for time, like $5, and you have an hour you can
Ah,
play on pool tables, that sort of thing?
sure. So when you go to the pool hall and you buy an hour of time, however many games you get, it's not a coin operated pool table. That's through their register. That's the full 4.2% state and city tax. You're buying admission to the pool hall to play on their tables, as opposed to putting your 4 quarters in to the machine and it dispenses the balls. Um, so that's kind of the distinction there. Um, it's not that
Right.
pool tables are not subject to city tax. It's that specifically the coin operated ones used to have to fill out, and they would get a sticker each year that went on it because they were paying this other amusement device tax instead of municipal sales tax. That went away a couple of years ago now, if I remember right. Um, but that exemption still applies, so they don't worry about the 2% city tax on those devices. But the pool hall, the bowling alley, whatever it might be, when they're charging you for time, they're charging you for the admission. That is the full 4.2% state, 2% city. As we get into on the next page, there's municipal gross receipts tax that can also apply to admissions and things like that. And then we could potentially get into tourism tax as well. And we'll go over those things a little later.
Okay, thank you.
That gets it. Okay. And we do have a tax fact on those amusement devices too that Lori just dropped into the chat for us. Okay. Municipal gross receipts. This is an additional 1% tax that cities can charge on alcoholic beverages, lodging, eating establishments, and tickets to admissions, places of amusement, athletic, and cultural events. The city can select all four. They can select only one if they want to. They go through and they can pick and choose if they want the municipal gross receipts on all of these. And we have a document on our website that kind of lays out municipal gross receipts, admission, prepared food, lodging, alcohol, however the city checks those boxes. It is reported on the sales tax return, the city section. If you're filing an EPATH, there's a checkbox that says, do you have municipal gross receipts to report? You check the box and it just adds in another place for you to report this. You can run into businesses that have things that are subject to municipal gross receipts and things that are not. And so you might fill out a sales tax return and those numbers will not match. And that's perfectly fine. You may also end up with a business where everything they sell is, most restaurants, prepared food. It's subject to the municipal gross receipts and all those lines match, makes it real easy. On the paper returns, which is the example we see there, you just do another line for the municipal gross receipts tax. And you just kind of fill out each line as you go, separate those things out. So anything in city limits, subject to the 2%, is reported in this example on line 6, where you have the Rapid City city tax. They have only $10,000, though, that is subject to that municipal gross receipts tax. The $1,000 of use tax does not carry through to municipal gross receipts. So it's only on the sales to the customers. You would not owe municipal gross receipts on things subject to use tax. Same for tourism tax, if tourism tax happened to apply to your business. Let's see, do not combine them under one code. Don't try to go, I owe $320 of Rapid City tax and then try to math your way into it. We don't want to do that. We want them specified and separated out like this. There are requirements on the municipal gross receipts tax for the cities and how they can spend money collected from that tax versus their 2% general city tax, which is a much more open and unrestricted. They can use that money however they want to. The municipal gross receipts tax has very specific requirements that the city has to comply with. Okay. And then the tourism tax. The tourism tax is a state tax, so it applies everywhere in South Dakota if you're subject to it. It's 1.5%, applies to the gross receipts of hotels, places of lodging, campgrounds, motor vehicle rentals, recreational services, spectator events, visitor attractions, and there's a special category of visitor intensive business where if they fall into that subset and 50% or more of their total annual gross receipts from their sales during June, July, August, and September, if 50% or more of their sales for the year happen in those 4 months, then they're going to be subject to tourism tax. And those are going to be things like t-shirt shops, candy stores, things that are generally kind of considered touristy businesses. And we have
gift shop, your
Yep.
jewelry shop,
Yep. And so
souvenirs.
there's a full list of them in our tourism tax fact that Lori linked there. So you have to be both. You have to be one of the visitor intensive businesses described there, and 50% of or more of your sales have to happen in those 4 months. If you're a bookstore, you're a jewelry store, where yes, you're on the visitor intensive list, but you don't have 50% of your sales in those 4 months, you do not charge tourism tax. And the other way around. If you have 50% or more of your total sales during those 4 months, but your type of business is not listed on those visitor intensive businesses, you are not subject to the tourism tax. You have to have both pieces be true for that tourism tax to apply. For hotels, campgrounds, spectator events, all those things, they're subject to the tourism tax year round.
So I have a question.
Yeah.
So my daughter has a business too, and she makes jewelry, but she
Okay.
goes to vendor fairs, and some of those vendor fairs give her this tourism tax form.
Yes.
But she does not make, I mean, she makes
Sure.
more. She doesn't make 50% of her income at those.
Sure.
So does she not have to pay that tourism then?
So the spectator events, the vendor fairs, flea markets, the Sturgis Rally, those things are all going to be considered spectator events. So they are subject to tourism tax year round, as opposed to like your storefront. So if she had a storefront where she was selling jewelry, t-shirts, a gift shop, that would be the visitor intensive business. And we would go through the 50% in those 4 months. At a special event, those are subject to tourism tax year round because it is a spectator event, it's an exhibition. It falls into a different definition of the types of businesses and that tourism tax application. We also have a tax fact on special events. Let me go find that one. There it is. And so there's the link to the special events tax fact, and the flea markets, vendor fairs, craft shows, all of those things, they fall into these special events and are subject to tourism tax year round, as opposed to the storefronts, which then we look at that visitor intensive business and the 50%. So yes, if she's going to flea markets, craft fairs, the event organizer has registered with us and they've gotten the special event return form from us, the form is correct, the tourism tax does apply. Okay, here we have a sample of a return for a hotel in Sioux Falls, because Sioux Falls also has a lodging tax in addition to the state, city, municipal gross receipts, and tourism tax. Sioux Falls is the only city in South Dakota that has this additional lodging tax. Any hotels anywhere
Can I
else
butt in for one second?
Yeah.
I think you were just about to say it. There's other cities that have the lodging tax, but Sioux Falls is the only one the Department of Revenue collects.
That we collect, yes, that's an important distinction. There are other fees, registrations, occupancy taxes that the other cities have, but those don't get put through the sales tax return. Sioux Falls is the only one that has a lodging tax administered by the Department of Revenue, and I have no idea of the history of how that happened, that we got roped into that one and nothing else. But on this return, each of those lines, they had $10,000 in hotel room sales during the month. And so each of those lines is that $10,000, $10,000, $10,000. And then the tax rate, and you calculate the tax due individually. We do not, again, we're not going to lump sum, try to put these things all together and say, I owe X dollars in Sioux Falls taxes. We want everything split out because, again, where the money goes and how the money can be used will change depending on which tax type it is. Okay, and then I've referenced this a couple of times. Here's a link to our tax match program. You can go to this site and it will allow you to type in the address, search for that address, pull it up, and it will tell you the tax rate at that location, city tax, if that city has municipal gross receipts tax. All of those things pull up through here. We also have the listing of all of the cities, their reporting codes, and their tax rates that you can get in the municipal tax information bulletin. And you can just have the listing of, here's all the cities. That is updated January 1st and July 1st. If a city wants to make a change, they want to add a city tax, whatever they're doing, they have to notify us in advance, and it can only be effective starting January 1st or July 1st. It's a really handy site to use to pull that up. You are certainly welcome to print those pages out. Keep them in your records if you feel like it.
Orders for cities do change. If you come across something where you're like, this address isn't correct in our system, please do let us know. Because cities annex
Yes.
things, and
Yes.
we want to keep that as updated as we can.
Yep, and their annexing does not always line up with July 1 and January 1. So those changes for a specific address that is now incorporated in city limits, those can happen anytime. Okay, ice cream truck. Operating from March through November. Okay, so let me pull up our tourism tax fact. I'm just going to drop the visitor intensive businesses because it's a very specific set. So let me just take this. Okay. So I'm going to drop an image from the tax fact into the chat. Specifically, visitor intensive businesses, antique shop, bookstores, candy stores, flea markets, gift shops, indigenous arts and crafts, jewelry, rock shops, leather shops, marinas, novelty shops, pottery shops, souvenirs, and t-shirts. Those are things that are considered visitor intensive businesses. If you're one of those businesses and you get 50% or more of your sales in those 4 months, you're subject to tourism tax. An ice cream truck is not one of those visitor intensive businesses. And so your sales throughout the year or throughout those 4 months are not subject to the visitor intensive business tourism tax rules. Now, if you go to a spectator event, air show, auto race, the Sturgis Rally, whatever it is, you may be subject to tourism tax because you've attended one of those special events. So you can certainly encounter tourism tax on your ice cream truck because you're going to a fair, a rodeo, these craft shows, all sorts of things. Again, if you go into the special events and the tourism tax facts, it lists those events out for you to look at. So yes, you might encounter tourism tax, but not all of your sales from June, July, August, and September are subject to the tourism tax unless you're only operating at those events. Okay, that squared it away to kind of break out the visitor intensive businesses versus businesses that only have more sales during those months. If we have, again, more questions, we can keep talking about this. How much?
We're moving on to use tax
time?
next.
Yeah.
So if
Going.
there's any more city tax questions, now's the time.
Yep. Okay. Okay. So use tax kind of explained some of this earlier. It applies to products and services used or sold, consumed in South Dakota if the sales tax has not been paid. It's the same rate, the same what's taxable. The use tax is a mirror of the sales tax. Again, the only difference is, did the retailer collect the dollars from the consumer, or is the consumer sending the dollars directly to the Department of Revenue? When you fill out your return, line 2 is use tax. And so you'll go through and you'll say that during the reporting period, I had X dollars of use taxable sales to report. One thing I want to kind of jump on is with like restaurants where they buy all of their food, the ground beef, the lettuce, the hamburger buns, all of that they buy exempt from sales tax for resale. When they sell it to the customer, they charge the sales tax. It's nice and easy. But if they give free meals to their employees, they're no longer selling that hamburger. And so they would owe the use tax on their cost of that bun, the ground beef, the cheese, the whatever else the employee gets. They owe the use tax on the cost that they paid for those items, not on what they would have charged to the customer, just on their cost. And they don't owe the municipal gross receipts on the use taxable amounts. So it's something that if you're buying things exempt from sales tax for resale and you take it out of inventory and you use it yourself in some fashion, then you owe the tax on your cost of that item at that time. For restaurants, if you give away employee meals, you probably want to figure out the value of your component parts and what that is so that you can document those things. Other things that you might wind up with use tax on, computers, items that might have been donated, farm equipment. If you purchase it out of state where they don't charge sales tax on farm equipment and you bring it into South Dakota, you do owe the use tax on that farm equipment. And being as, tractors and combines are very, very expensive, that can be a not insubstantial sum. It's real money there. So just because you bought it out of state where it was exempt from sales tax, when you bring it into South Dakota, it is not exempt and you will owe the use tax on the cost of that tractor, combine, bulldozer, backhoe, whatever it might be. There's no exemption for manufacturing equipment in South Dakota. So if you purchase the equipment to make your product, you still pay either the sales tax or the use tax if the vendor doesn't charge it to you. Software and support, again, you might be dealing with an out-of-state company that is not licensed and does not meet the either physical nexus or the remote seller economic nexus threshold. And so they don't have a license. They're not required to get a license. But you as the user in South Dakota will owe the tax on that service that you're purchasing. Okay. Any questions about use tax, or have we kind of gone over that? Okay. So we have a question. If you buy a headlight for a vehicle that's being repaired due to a body tech breaking it or losing it, do you pay use tax on it? So I'm assuming you're the mechanic shop. You have 10 headlights in inventory. Your tech drops one and it breaks. No, you do not owe use tax on waste. You don't owe it on things that are not sold to customers and you're not using yourself. So the broken light, it got dropped, it's going in the trash. If you had pulled it out of inventory and put it in your car, you would owe use tax. Because it got dropped on the floor and it shattered, you can't sell it to a customer, but the exemption still applied. You intended to resell it to a customer, it's just that circumstances have intervened. So you would want to document that, light bulb valued at $50, dropped, broke, and thrown away. You'd want that in your inventory records of how you disposed of it. That way, if you're selected for an audit, you have the documents that show, yes, I did buy 10 light bulbs. I did sell 9 light bulbs. Well, where's the other one? If you have the document that says, and we threw one away because it broke, now we've accounted for all 10. The use tax rate, it's the same 4.2% state city tax based on where you're using the item. It's the same what's taxable. Um, Anything subject to sales tax is subject to use tax if you don't pay the sales tax on it. As long as you pay sales tax to the vendor, they charged you the full 6.2%. You'll never owe more use tax than that. Um, if you buy it outside of city limits, the retailer charges you the 4.2% state sales tax that is appropriate at their location. And then you bring it into city limits, you do owe the city use tax on that item. The other thing that can happen is if you go to a state that has a lower sales tax rate than South Dakota, um, you can end up owing the difference to bring you up to potentially that 6.2%. So if that happens, I generally recommend you call our 800 number, because when you've paid a portion of it, we have to figure out how much did you pay, how much do you owe, and then we have to work into the math to tell you what to put on the return so that you're only paying the additional amount of tax due to bring you up to the right amount, rather than making you pay the full amount again on that item. You do get credit for tax that was legally due in another state. Now, in most cases, most other states either charge no sales tax, like Montana, you just owe the full use tax when you're bringing it into South Dakota, or they charge a higher sales tax rate than we do, and so there's no additional tax to report. So it doesn't happen very often that we're working with a partial calculation, but it can happen. Okay, so what if EPATH configures the use tax incorrectly? I would want to look at your return and figure out what's going on. You might be entering something onto like line 1 and line 2. We don't need to report it as gross sales and as use taxable. We've had people where they put their full gross sales on line 1, their taxable sales on line 2, non-taxable things on line 3, and they doubled up the tax reporting on that use tax because they entered it there instead. So if EPATH is doing it wrong, I would need really specific examples. If you've got your return pulled up, that might be a good phone call to do with an agent so we can look at that specific return with you. Okay, so yeah, our 800 number will be, I think that'll be at the end. It's a great line. It's where I started. They'll go over those specifics if you have something that we're going to have to look at with you. And then Lori just dropped it in there for you. Let's see, more use tax for purchases out of state. If it's delivered to you in South Dakota, they'll just charge the right address, the right sales tax. If you go out of South Dakota and you pick it up, the retailer has to charge you the sales tax where you pick it up based on that state. And then you get that credit. So you don't owe use tax on something that you correctly paid sales tax to another state for. Just make sure that your invoice, your receipt, whatever it is, clearly shows the rate that was charged and where you received it. Again, it'll make, if you're audited or selected for a review, way easier to have those two pieces of item or two pieces of information on the receipt or the invoice. Saves a fair bit of headache. Okay, then, okay, these are the materials taken from inventory. So this is where that headlight example kind of comes in. So when you take it out of inventory, if you're using it yourself to put in a display, to fix your own car, whatever it is, you're going to report use tax on it. If it's sold at a later date, so you put a computer as a display item that the public can go, hey, we're going to try to buy a new computer. Do we like this one? Yes, we like this one. You don't get to deduct the use tax. You still charge the sales tax to the customer when they buy the floor model, and you still owed the use tax on it when it came out of inventory and you were not intending to sell it at that time. It is one of those weird, it does double up there. Okay, and then here's again that credit for equipment and things. If you're bringing equipment from another state and it's been there more than 7 years, you don't owe use tax. It's fully depreciated. So if you've got a construction company, landscaping company, whatever it is where you've got manufacturing and you're moving to South Dakota, if the equipment is less than 7 years old, you'll go through your depreciation schedule and you'll pay use tax on the fair market value if you've never paid sales tax on it before. If it's more than 7 years old, even if you've never paid sales tax on it, it's fully depreciated. There's no use tax due on items more or equipment more than 7 years old. So if you've got a construction company based in Montana where they don't have a sales tax and they travel, they go to North Dakota, they go to Wyoming, they come to South Dakota, the first time that equipment enters the state, you would owe the use tax on it. You would want to keep in your records which state did it enter first, what was the rate that was charged for the use tax. That way, North Dakota, Wyoming, and South Dakota are not all trying to claim the same use tax from that item. It's due one time, and then you get credit for those other states as long as it was correctly due to that first state and their rate is equal to or greater than the other state. So it's, again, a real documentation piece that you'll want to have, which pieces of equipment have been where, how much use tax has been paid, because that will get you out of future use tax. You don't owe use tax on the equipment each time it comes into South Dakota. You've paid it once. Now that piece of equipment is good in South Dakota for the future. Just like a South Dakota company, when they buy their equipment, they pay the sales tax on it, and then it's done. They don't have to keep paying year after year on all of their equipment like this. Little different for motor vehicles. That's a whole nother conversation with their annual registrations and whatnots. But the vehicles are different than equipment like skid steers and backhoes and things. These are only the non-registered, non-motor vehicles, non-titled items like that.
Any other use tax questions before we move on to a new topic?
Okay. Here again, we've gone over sales and city tax apply where the customer receives the product or the service. If it's at your location, seller's location, seller's address is what determines sales and city tax. If you deliver it, it's based on the delivery address, state and city sales tax rate. For things where it's delivered, but you don't necessarily know the delivery address. So these are generally things that are purchased electronically. You'll go to the customer's address. So I might buy an app on my phone while I'm in Sioux Falls, but the app doesn't know that I'm in Sioux Falls. It just defaults back to my regular customer address because they can't track me personally day to day. And then if the product is transferred and you have no address, then you go on the seller's address. Um, Pretty rare anymore to get no address information, but if it happens, it's based on the seller's location.
And we do have a question in the
Yep.
chat.
Yep. So municipal use tax on equipment. Yes. If the
Ah.
equipment is subject to city sales tax and you've never paid the tax, when it comes into city limits, you would have use tax. So again, I'm going to go back to that Montana example. Montana Construction Company has a skid steer. They bring it into, say, rural South Dakota, and they do a job there. They're going to pay the 4.2% use tax because they're outside of city limits for the use of that skid steer, and then they bring it back to Montana. 3 months later, they get another job in Spearfish, and so they bring that same skid steer into Spearfish. They've already paid the 4.2% state use tax. Now they're going to pay the 2% Spearfish municipal use tax. They've now paid 6.2% on that skid steer, and any other cities that they go to, they're done. We don't have to track that it was in Spearfish and then Rapid City and then Lead, and then they've paid the tax on the equipment, and so they're done with it. But there is city use tax. It does kick in.
Unless it's agricultural equipment.
Right, agricultural equipment is exempt from municipal tax, exempt from sales tax, exempt from use tax for the cities there because it's ag equipment.
Yeah, I have another question too.
Yeah.
So we sell a lot of stuff on auctions, farm
Sure.
machinery, mostly farm equipment and tools and
Sure.
stuff. And some of the people are shipping them out of state. We always request a bill of ladling or some kind of a shipping receipt, but we don't always get those back because they might ship it tomorrow or they might have somebody come get it in 2 months.
Sure.
So what can we do to, if we don't get those?
Sure. So the bill of lading is great documentation showing where the transportation company is going to deliver it. If you do not have a bill of lading, you can't have, Farmer John just asks his buddy to go pick it up. Well, his buddy's not a transportation company, and so his buddy cannot provide a bill of lading. His buddy picks up the equipment in South Dakota. The South Dakota sales tax applies. The sales tax for auctions, it's where the customer receives it.
Right.
Transportation companies extend where the customer receives it. But they have to give you that documentation. You do have to have something that shows that this equipment was delivered by a third-party transporter to the customer at whatever their address is. You have to have that documentation. Without
and
that
if you
documentation,
flat don't know, then you go to the customer's address.
Right, we might go to customer's address, but you're still going to need a document that says a third-party shipper picked it up so that you have something in your records that says the customer did not pick it up at our site here in South Dakota, and we have at either the bill of lading and the exact address or a very good likelihood that the transportation company took it to their address, the customer's address outside of South Dakota.
Okay.
Okay. Okay, and then we're just, again, going through for services. It's, again, where the service is performed, where the customer receives the product. So for like the mechanics shop, if the customer picks up the car at your shop is what determines the sales tax rate. If you drive the car to the customer and you deliver it to them, then their location is what determines the rate. For the lease of equipment, rental products, things like that, the first month is where they pick it up. So if they come down to your rental place and they load up the skid steer into the back of their truck, you're going to charge them sales tax on the first month lease payment based on your address. After the first month and you've sent them the second bill, the third bill, the fourth bill, and so on, if they've told you, I've got the skid steer at my farm and here's the address, you would charge the sales tax based on their farm location or wherever it is they've told you the equipment is being used. If they don't tell you anything about where they've taken it, you're still going to use your location where they received it. But if they do provide that information, the city tax may not apply if they take it outside of city limits, but you want documentation in your records so that you can show why you didn't charge the city tax to that customer. Or if it's taken out of state, why you didn't charge any state or city tax on that equipment because they told you it's going out of South Dakota. Okay, here's just a sample invoice going through line items on an invoice to a customer. They're billing for the software, the installation, and the travel. The total of those things worked out to $5,000. That's what the tax is on. When the software tech, whoever it is, pays the hotel, they pay for the meals, they're paying sales tax to the hotel. They're paying sales tax to the restaurant. They are not expenses that they can purchase for resale. They are not reselling nights in the hotel. They are not reselling their dinner to this customer. That's just something that they're encountering. They have to buy it and they have to use it in order to provide their service to the customer. They have to be on site, but the customer is not purchasing those things, and so they cannot get the exemption certificate for their meals, for their lodging. So the full amount that they bill to the customer, whether they itemized it or not, they could just say, I'm going to charge you $5,000, one line item, charge the tax and carry on. They can break it out like this. It's still going to be the same subtotal subject to sales tax at the end of the day.
All right, we're now about halfway through our time in our presentation. Does anybody want to take a quick break or do we want to carry on? What do you
Let's go
think,
ahead and
Alex?
just let's go ahead and take like a 3-minute break.
All right, sounds good.
And then we'll just come back here in a few minutes.
Yep.
Okay, are we ready to restart, or should we wait another minute or two?
I'm good if you are.
Okay, now we'll get into exemptions from the sales tax. Three reasons that something might be exempt. Either the product or the service is specifically exempt by statute, things like healthcare. When you go to see the doctor, it's not subject to sales tax because healthcare is specifically exempt. The purchaser is exempt. Exempt entities, government, um, schools, relief agencies. Relief agencies are a special subset of nonprofits. Most nonprofits are still subject to sales tax. Um, or the product or service is used for an exempt purpose. The resale exemption is generally that one. If you don't receive a properly completed exemption certificate, you should collect the sales tax. If somebody comes to you and says, I'm an exempt entity, they should have the documentation to go with it. We've got a copy of the exemption certificate. It needs to have the who is buying it, who is selling it, why is it exempt. All of those things need to be on the certificate. Um, we do generally recommend that you have the certificate updated annually, but that is not a requirement. But you do have to have one in your records. The annual update just makes it easy to keep the records all together. If you sell something out of state and they say they're exempt, well, it's going out of South Dakota, so it's not subject to South Dakota sales tax. So you would then look at the state that they're in and the exemption they're claiming. And if you have a license in that state and have to collect that state sales tax, you'd go through there. You would, if they're picking up in South Dakota, their sales tax exemption in another state does not apply. So they would have to fall into one of our exempt categories. You can certainly have a Nebraska business purchasing something in South Dakota to resell to their customer. And they can give you a properly completed exemption certificate with their Nebraska sales tax license, and that's perfectly fine. But they cannot say, I'm a farmer in Nebraska, and farmers in Nebraska are exempt from Nebraska sales tax. And so when I come up to buy my tractor in South Dakota, I'm exempt from sales tax. No, if they pick it up in South Dakota, they are not an exempt entity in South Dakota, and so they would owe the tax. So they have to qualify for one of those three reasons for us. Either the product or service itself is exempt, they're an exempt entity that we recognize, not that their state recognizes, but that we recognize, or they're able to give you the resale exemption certificate there. Does that answer the question there for you? If they're South Dakota, so if they're a relief agency, a government, they'll be able to provide you that exemption certificate with that information. If they're a Nebraska exempt entity, they will need to fill that out. Either government, the Nebraska state government gets reciprocity there. Most states do, not all states. There are a few exceptions where they don't recognize ours, and so we don't recognize theirs. But generally speaking, they'll fill it out, give you the exemption certificate, and the exemption they're claiming has to be valid in South Dakota. So again, if you have a Nebraska farmer who's claiming that because they're a farmer, they're exempt from sales tax, that's not an exemption in South Dakota, and so they would not be exempt. Um, do you have anything else, Lori? Were you going to jump in there? Or? Okay.
No, I didn't. Sorry.
Okay. So when they're filling out the exemption certificate, you need to keep the document for at least 3 years. It doesn't expire unless the information changes. We do recommend you update them annually. It just makes the record keeping easier. If you have a purchaser from a state that does not issue sales tax licenses, like Montana, they don't have a sales tax, and so they don't need a sales tax license. If you have a retailer who's purchasing in South Dakota, picking it up here, yes, they can fill out a resale certificate with their federal employer ID number, driver's license number, state issued ID, something that we can use to identify them, again, if it comes up in an audit. That way it's a properly completed document, even though they don't have a license because their state doesn't issue one. If they're from a state that does issue a sales tax license, but they don't have one, they can't claim to buy for resale because they don't have a sales tax license that's valid. So it would be specific to the handful of states that do not have sales tax licenses where that would kick in.
Now I have
Businesses.
a thought to throw in there for you, Alex.
Okay.
Our exemption certificate is what's considered a multi-state form. So if you look at the bottom here, it's a little bit cut off, but it's got a list of various states. That means this same form is good for all of these states listed below, and their form would be good for us as well, because we're all part of what's called the Streamlined Sales Tax Project. So we collect all the same basic information on our forms, and we accept them for all of those streamlined states.
Yep, thank you. So yes, you might get one form and it might have a whole bunch of different information filled out at the bottom with all of their licenses because they have multiple licenses in multiple states. That's perfectly fine. If they can fill out that they have a sales tax license in any state, they can buy for resale. They do not have to get a South Dakota sales tax license or permit to buy for resale in South Dakota. They have to have a sales tax license to sell in South Dakota. But you could certainly have a Wyoming business, Minnesota business that doesn't sell here, but has a vendor here and they're picking something up. They can still buy for resale, even though they're picking it up in South Dakota. Some exempt products and services, some agricultural products, educational services, the food stamps or WIC, those purchases made using the food stamps, SNAP, WIC, whatever program there that it falls under, those are exempt. The forestry services, healthcare services, the purchase of livestock, the purchase of motor fuel is exempt from sales tax so long as it is the gas station goes in motor vehicles that are used on the road. Dyed diesel, which is not able to be used on the road, is subject to the sales tax when it's purchased. Even though it may be at the same gas station, it's a separate product, measured, tracked separately, not subject to the motor fuel taxes. It's subject to sales tax. The motor fuel that goes into the vehicles that can drive on the road, that's not subject to sales tax. Motor vehicles are not subject to sales tax. Those go through the title and registration process. Prescription drugs, social services, travel agent services, trucking, and then water for domestic use. Those are all things that are exempt products. Anybody can buy them for any reason, and it's exempt. We don't have to worry about them filling out the exemption certificate for healthcare services. You can go down to the doctor and they will not charge you sales tax on the doctor visit because they know that it's an exempt product or service. For things like the food stamps and WIC, you'll want to make sure that your payment system identifies the payment method so that you can show that it was not subject to tax because of the payment method. You want to make sure that you're tracking those things. Most of those things, you'll just be clear on your invoice that you're billing for these exempt products and services, and that kind of solves the issue for you. Here we have the exempt entities: governments, public schools, municipal governments, volunteer fire and ambulance departments, the tribal governments. Non-profit hospitals are exempt. Doctors' offices, clinics, they are not exempt entities. For-profit hospitals are not exempt entity. It is specifically only non-profit hospitals that are exempt from sales tax. Religious, educational institutions are exempt from sales tax, but they have to register with us to get the exemption. Nonprofit accredited private educational institutions, again, they have to register with us. Nonprofit relief agencies that are recognized by the federal government and the South Dakota Department of Revenue are exempt. They have to, again, register with us. They will get a specific license number from us that they can fill out on an exemption certificate. Employees and representatives of an exempt entity do have to pay the sales and city tax if they're using a personal check or personal credit card. So lodging paid directly from an exempt entity is exempt from sales and city tax, but if it's the employee paid for it and then is reimbursed, the employee is not exempt. The exemption does not flow through the employee. The hotel has to charge the sales tax to the teacher who's there for the conference, even though the school will reimburse them. If the school pays the hotel directly for the room, then their exemption is valid. Government entities have to provide the exemption certificate, or the vendor has to keep the documentation that shows the purchase was paid directly from those government funds. Might be the purchase order, check stub, government credit card, things like that. You have to have the documentation that shows it was paid by government funds and not by the individual at the hotel, restaurant, whatever it might be. The exemption, again, does not flow through the employee. And then the exempt transactions, things for resale, things sent out of state. There is an exemption for repair parts and services to ag equipment. It's a pretty limited exemption. It only applies to the parts and repairs for those ag pieces of equipment. The original purchase is still subject to that tax. And there are a handful of businesses that have a direct pay permit where they've registered with us. We've confirmed that they have a system in place that they can track what is taxable and what is not taxable, and they just buy everything exempt, and then they pay the use tax directly. Without a direct pay permit, a business cannot come to you and say, oh, no, I'll just take care of the use tax on my own. That does not work. They must have registered and gone through the process of getting the direct pay permit on file with us for that to be okay. The things, sales for resale. Businesses can purchase items exempt from sales tax if you sell, rent, lease it to your customers in the normal course of your business. You can purchase items for resale if it's a part of the final product. Service providers must pay sales tax on all the products and services they purchase unless there's a specific exemption. So for hairstylists, when they purchase shampoo, they pay sales tax on the shampoo because they're not selling the shampoo. They're using the shampoo after they cut your hair when they're washing you out. That's not something they're reselling to you. Even if they charged you a $2 shampoo fee, they're still not reselling the shampoo. They're using it to provide their service. Um, Manufacturers, the raw materials, the things that become part of the item sold, are things that they can purchase exempt for resale. Containers can be purchased without sales or use tax. Labels, the packing cases, the wrapping paper, the tape, the bottles, the bags, the cardboard boxes, all of those things that the customer gets when they receive the final product are also considered part of the product. So they can purchase the cardboard boxes, whatever it is, exempt from sales tax because the customer gets it. It's not something they are using. When the manufacturer purchases their tools, their forms, whatever it is, those things are taxable. So their operating expenses, sandpaper, oxygen, acetylene, electricity, their prototypes and molds, any consumable services, safety glasses, gloves, um, personal protective equipment that their employees need. Those are things that their customers are not going to get. The manufacturer is using them to make and provide their product. The manufacturer has to pay sales tax on those things. Services that are part of the manufacturing process may be purchased for resale, welding and painting. The purchaser of the service does not use that service in any manner, and the service is delivered or resold without alteration. So the welder puts the pieces together. The manufacturer is not going to do anything else with that welding. They can't use it on anything else. It's just part of that final product. Same with the paint. It's been painted. The paint isn't going on to the equipment. The paint isn't going into the building. And so it can be exempt for resale because it's part of that final product. Um, Service providers, they can purchase another service for resale if it's delivered to a specific customer in conjunction with the services that are contracted to be provided to that customer. Has to be on behalf of the customer. The purchaser cannot use that service in any manner, and it has to be delivered or resold with no alteration. So these are going to be for things like advertising engineers, where you might have somebody who's going to do a service. They're going to put together something that the customer is getting. You can identify the customer. You're not using it, and you're not changing what they've given you. The containers, they can be purchased exempt from sales tax if the retailer furnishes the container free of charge and the container holds the product sold to the customer. Containers do include boxes, bags, food wrappers, cups, things like that. Ag equipment is subject to the state 4.2%, not city tax. So the sale of farm machinery, attachment units, irrigation equipment are all taxable when they're purchased. There's an exemption for the sale of parts and repairs on farm machinery or attachment units, irrigation equipment, maintenance items and maintenance services when used on farm machinery. There's an exemption for seed so long as it's sold in 25 pounds or more. Exemption for commercial fertilizers as long as it is 500 pounds or more. An exemption for pesticides, fuel, and electricity used to power irrigation pumps. If the farmer, egg producer is purchasing them they have to document to you that it's an exempt for ag use. They can just fill that out with their federal employer ID number, but you'll want a record showing that they told you that the particular fuel is going into their tractor and it is not something that should be subject to tax. The tribal tax collection agreements, we have 5 tribal governments that have the sales, use, tourism, contractors, excise tax agreements. Standing Rock, Rosebud, Cheyenne River, Oglala, and Crow Creek. The sales tax in those locations works exactly the same as the sales tax everywhere else in the state, but it gets reported and the state portions of those go back to the tribal government rather than to the state. There are 2 tribal governments that have limited tax collection agreements for use tax and contractors excise tax, Yankton Sioux and Sisseton Wahpeton. There are specific addresses where the contractor's excise tax applies, use tax applies. For non-tribal businesses selling into the tribal areas that do not have collection agreements with us, you just charge the regular state 4.2% sales tax. It gets reported to the state. For the ones that have the agreements, you collect the sales tax from the customers just like everybody else, but you report that for the special jurisdiction so that the money goes back to the tribe. There are additional taxes that the tribes may impose. They are handled directly with the tribe. So the taro and the tecro taxes, those are specifically handled to the tribal Department of Revenue. It does not go through the South Dakota Department of Revenue at all. There's no agreement for the Flandreau or Lower Brule tribes, and so you just charge the sales tax as you regularly would, and it gets reported to the state.
If you're doing especially a construction project on one of these non-agreement reservations, I would highly encourage you to contact us here at the department and let us help you with that. Because there's a lot of questions that have to be asked to find out what the right way is to apply the tax.
Yep. And then there are some specific tribal use only exemptions and a handful of other things that
There's
can
some special things
that can all come up. Yes. But they're generally pretty rare. So unless it specifically comes up, it's one of those things that's not really worth worrying about for most of the time. Okay. Sales of products or services delivered to Indian country without a sales tax collection agreement are just subject to the regular state sales tax. Enrolled tribal members on non-agreement Indian country controlled by that member's tribe are not subject to sales tax. We don't make them collect the sales tax. Enrolled tribal member retailers may be required to collect the sales tax if they're selling to non-members, and then they send those funds to the state. Sales off of Indian country are taxable as everything else. Okay. When you're filling out the return, all of the special jurisdiction sales are included in line 1. It's part of your gross sales. If you have any exempt non-taxable sales, those go into line 3 like all of the other non-taxable sales. Tribal government, a retailer who's on tribal ground, it doesn't matter which reason for the exemption, just because they're on tribal ground, if they're exempt, and it still goes into line 3. And then the taxable sales to the special jurisdiction, those go onto line 4. And then you'll tell us in the city additional reporting on the paper returns which special jurisdiction it is, how much the sales are, what the tax is. On ePath, you just fill it out right there. Again, you'll select which special jurisdiction and how much that sale was. Here's an example, what it looks like. You have total sales, some non-taxable sales, and then the special jurisdiction of $1,000 of taxable sales to a customer on whatever that particular um, tribal jurisdiction happens to be. You have the city tax, in this case, it's Rosebud Sioux Tribe with its reporting code, and then the other cities all get reported through that same return form. Okay. There's a 911 emergency surcharge. This is something that telephone providers, cell phone carriers, things like that are going to be handling. It's $2 per service user line that the provider collects. And then there's a prepaid wireless emergency surcharge. It's 2% of the gross retail sale of the prepaid wireless services. They have to register with us. The surcharge is reported and remitted through ePath. There's no paper reporting form for these. You have to do it through ePath. And then the providers are allowed to keep an administrative fee of 2% or $25, not to exceed the amount they collected. If you're dealing with phones and communications, we do have some additional tax fact documents that go into more detail on those subjects. Okay. Accounting methods. There are a couple of different ways that you might be doing your accounting. Accrual, where the tax is paid on all sales during the reporting period. So it's billed when you invoice the customer with no regards as to whether or not you've been paid. You may have conditional sales. If you have payments for principal sum where it extends over more than 60 days. So you're on the accrual accounting and you've got a customer who's paying you over multiple months, then you'll do each monthly billing on your sales tax return, as opposed to invoicing the full amount up front and paying the full sales tax up front. If you're on the accrual method, you may also encounter bad debts where you've reported the sale because you billed the customer, but they have not paid you. When you write off the bad debt, you can also deduct that on your sales tax return to get the tax that you did pay and have not collected back. If you're on the cash accounting method, then you pay the sales tax as the customer pays you. And so you shouldn't have any bad debts because you're only reporting what you were paid. There may also be things that your tax accountant wants to go over with for your federal income taxes. There can be some implications that your accounting method has there. But this is just the general overview as far as the sales tax goes for the Department of Revenue. Accrual, when you bill the customer, you owe us the sales tax. On cash, you owe the sales tax as you receive payment. Filing and paying your return. You have to file a return for each reporting period that you have a scheduled return, even if you don't have any business during that period. It's important to file a zero return if you had no business. That way we don't charge you the late filing penalty and go through any collections activity. You might have a monthly filing requirement, could be bi-monthly, quarterly, semi-annual. Some businesses get seasonal where they file monthly returns while they're active, say May through September, but then they're closed the rest of the year and we don't bother sending returns for the months that they're closed. They have set that up with us in advance. If you are set up as a monthly filer, even though your business is seasonal, if we're sending you returns, you still have to file them as zero. You can certainly contact us and say, hey, I'm closed October through March, and then we can update your filing schedule. But if a return is due, it has to be filed even if there's nothing to report. Okay. ePath, talked about this a few times. It is our electronic filing system. It's available 24/7. You can always go on and take care of it. You have access to multiple payment options. Um, it allows you to set up an account for yourself and issue additional accounts for your bookkeeper, your accountant. It allows you to access the started return. So you can start it, you can come back to it. It will save every time you click to the next page in ePath. So you can have your accountant or your bookkeeper start the return and set it up for you. And then you log in and go, yes, that looks right. I'm going to finalize it, send it off, schedule the payment. You can save your bank account or just use one-time bank accounts. If you have, again, multiple locations, multiple sales tax licenses, but one legal entity owns them all, we can link the ePath accounts across those related businesses. Um, the system does all the math for you. You just say, my sales were X and they were in whatever city, and it'll take care of it for you. You can amend the returns directly through ePath if you find an error later. Um, on paper returns, in order to amend a return, you have to contact us. We have to send you a paper amended return form that you fill out and send back. With ePath, you can just go in and do that yourself. You can look up your filing and payment history. So when you go to do your federal income taxes, go into the View Account Activity function, and you can access all of your returns right through ePath and see what were my sales each month or each filing period. You can change a pending payment in ePath up until 2 days before we pull that. So if you schedule it for the due date of the 25th, when the payment is due, up to generally it's the 23rd, a couple of business days, depending on weekends and whatnot. But you have those additional days where if you want to make a change, you can edit your payment. Okay. You can pay with credit card through ePath. There is a card processor. You'll just enter the card information through their site. There is a 2.45% convenience fee that the card processor charges to use a credit card. For the ACH debit payment method or the ACH credit payment method, there's no fee. With the ACH debit payment, you enter the bank account routing information, you give it to us, and then we send the payment information to the bank, and they send the money back. With the ACH credit payment method, you have to go to your bank and tell them to wire the money into the Department of Revenue's account. If you are not already familiar with that process, I do not recommend using the ACH credit payment method, but some of the big international companies, that's what they use to help prevent unauthorized withdrawals from their accounts. Okay. We have some record keeping requirements. The sales, invoices, receipts, your ledger, bank deposit slips, your contracts, how you figure out your menu, your portion sizes, anything that goes into this is how I got paid, you'll want to keep all of those records. Your deductions, any resale certificates, the proof of exemption, the bill of lading, the proof of delivery, credit memos or refund invoices for returns, your bad debt paperwork when you're writing something off if you're claiming a bad debt on the sales tax return. You also want to track your use tax, your purchase invoices, check registers, your fixed asset schedule, inventory withdrawals, depreciation schedule. So that's where when we were talking about the headlight that accidentally got broke, you don't owe use tax on it, but you'll have a purchase invoice. I bought 10 headlights. You'll have your sales invoice. I sold 9 headlights. If your inventory does not have 1 headlight remaining, that's where we want to have a document that says we threw away 1 headlight so that you don't wind up with a use tax liability or assessment at some point in the future. Machine sensible records are generated electronically. State regulation requires that machine sensible records be available to an auditor upon request. You have to be able to print out your records when we say, hey, we're going to do an audit. Electronic records are fine. You don't have to print out everything you've ever done and put it in a box and store the box for years. But if we select you for an audit, you have to be able to print those out and provide the documents to the auditor. A lot of auditors just get their stuff by email, and that's fine, and you never have to print it out. But you have to be able to provide the documents when we ask. And you do need to keep your records for at least 3 years. That is our audit period. IRS and all the other people you may be involved with certainly may have different retention periods. Ours is 3 years. Additional documentation to keep the tax return, keep a copy of it, keep the schedules, the working papers that you used to put together the return, your supporting documents, worksheets, schedules, whatever it is, how you figured out what to put on the return. It's handy to have that report if you're selected for an audit. How did you get this number? Well, this is how I got that number. Saves a lot of time. Okay. And here's our contact information. We have our 800 number, email, we've got our website. On our website, you can find all of our tax facts. We've linked a few of them in the chat. They're very handy documents. You can grab them. If it's something that you routinely have questions about, you can print one out and put it next to your computer, whatever it is, however you want to handle it. They are available on our website 24 hours a day whenever you need them. If you have specific questions, our 800 number, you can call, you can talk to an agent. Generally, you're going to get to a person the first time you call. You don't have to wait and leave a message and we'll call you back. You're not going to spend 30 minutes on hold waiting for somebody. It's generally pretty quick and easy. We also have an online chat. If you have a real simple question, just looking for a quick answer, you want a link to something, works really well for that. If you have a complicated scenario and how does tax apply, probably better to call than to try to do that through the chat. Does that bring us to the any questions slide? Oh, our field offices. If you want to go in person and talk to an agent, we do have offices throughout the state. You can schedule a time to meet with them in person and sit down, go over your records, whatever it is you've got there. Okay, for use tax. So yes, for use tax, if you're inside city limits, the seller did not charge you the sales tax, you'd have the state 4.2% and the 2% city tax. So it's at 6.2% total is what the seller would have charged you had they charged you sales tax. Any other questions?
You can always email Alex or myself as well. I sent our contact info out with the confirmation email yesterday. If you have follow-up questions you think of later. This session was recorded in probably within the next day or so. We will get it up on our YouTube channel if you need to refer back to anything.
Okay. And then, like we said, for some of those more contractors excise tax specific questions, that seminar is on Thursday.
Yes, I can email out the link to everybody once we get that posted. I can do that, yes. If there's anyone on this call who would like CPE or continuing education credit, if you could please drop that into the chat, I will make sure you get that certificate. And other than that, Alex and I will hang out here for a few more minutes, but thank you so much for all your time this afternoon.
Thanks, Alex. And Lori, I did have a question I thought of. Yeah,
Go
just
for
a
it.
moment about. So I have a board game store where we'll just sell things like any retail store, but I'll also have a play area where I'll charge admission, potentially, right? And so we talked about that earlier, and that seemed to fall pretty solidly in the gross receipts category. And I'm in Rapid City, so my question is, would this, if let's say for that play area, say it costs $5 or something, would the city tax and the municipal tax and gross receipts apply, or is it just the gross receipts in that case?
Sure. So the municipal tax, the standard municipal 2% applies to all things subject to sales tax in city limits. The municipal gross receipts tax is an additional tax of 1% on those limited alcohol, admissions, prepared food, lodging. So you wind up adding 3% city tax to those things. It's in addition to, not in replacement of.
Okay, great. Yeah, that's exactly what I wanted to know, if it was additional or one or the other. So, okay, thanks.
Yep,
That's
yep.
all I have.
Okay.
All right. Thanks again, everybody.
Thank you.
Thank you. Y'all have a great day.